Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Monday morning, markets are open. Welcome to Modern Investing Techniques, episode 112. Today is July 20th, 2026. I'm Patrick, broadcasting from Vancouver. Monday means fresh setups. Let's break down the week ahead and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian investors holding energy exposure could see margin pressure tighten as U.S. gas prices return to $4 amid renewed U.S. Iran clashes. The S&P 500 closed at 7,458, down 1.0%. The Nasdaq Composite closed at 25,520, down 1.4%, with year-to-date gains of 9.83%. The TSX Composite closed at 35,264, down 0.2%. South Korean AI-linked stocks led a regional sell-off while oil prices climbed on geopolitical headlines, and Statistics Canada releases June inflation data this morning. On the matched window basis across 37 benchmark trades, our portfolio sits at plus 18.94% versus the Nasdaq at plus 12.35%, for alpha of plus 6.59%, though that figure remains early and not yet statistically significant. With the broader tape under pressure, let's look at one leadership signal that could matter for Canadian software names. Executive appointments at enterprise-software firms can act as leading indicators for operational execution in complex sectors like supply chain. Today's announcement of a new CFO and CSO at Kinaxis highlights a company bringing in 25-plus years of M&A and transformation experience at a time when global logistics volatility remains elevated. Investors can screen TSX-listed software names for similar leadership additions using the company's own investor relations feed. Cross-reference those names with 20-day average volume to confirm institutional interest. This approach worked well in prior cycles when supply chain names re-rated after credible finance hires signaled improved capital allocation. The risk is that headline appointments fail to move the stock if broader market rotation into defensives dominates. Always require both the appointment catalyst and a same-day volume spike above the 20-day average before sizing a position. Leadership moves are one way to read execution risk. Now let's see how macro data like inflation actually moves sector weights inside registered accounts. Imagine you hold a broad Canadian equity ETF in your TFSA, and Statistics Canada's June inflation print comes in hotter than expected this morning. Your order to rebalance into energy names fills at the opening print, but the actual mechanism driving that price is the market repricing the probability of a Bank of Canada pause versus cut. The bid-ask spread on sector ETFs can widen from 3 cents to 12 cents in the first 15 minutes after the 8:30 a.m. release as dealers hedge delta exposure. What most retail investors don't realize is that the inflation number itself does not move prices. The surprise relative to consensus does, and that surprise is already partially reflected in futures markets by 8:29 a.m. The biggest mistake with inflation day rebalancing is treating the data release as a binary buy or sell signal. Instead, always wait for the 20-minute volume-weighted average price after the print before executing the rotation. Given today's lack of clean setups, here's why we're skipping a new practice investment. This is a simulated trade for educational purposes only. No real money is involved. No new position initiated today. The geopolitical-driven oil price rise is visible in today's headlines, but no single listed Canadian energy name carries both a confirmed volume spike and a clean technical setup in the provided data. We are watching for any energy-related TSX name to close above its 50-day moving average on volume at least 1.5 times the 20-day average. Without a confirmed volume catalyst, entry risk remains elevated given the 1.4% Nasdaq move and potential for further rotation out of cyclicals. Skipping a trade when the catalyst lacks confirming volume prevents forced entries into names that may simply follow broad market beta. Listeners learn to define explicit volume and price level gates before committing capital. The next Monday window will focus on the consumer sector once inflation data clarifies cost trends. No newly closed trades since the last review. The most recent practice investment has already been evaluated, and current holdings remain open and pending their scheduled review, so there is no new realized result to report today. While we wait for better setups, two tools worth adding to your workflow. Institutional monitoring is shifting from static audits to continuous signer control and incident readiness checks after operational failures drove most recent crypto losses. Canadian investors holding crypto in registered accounts can apply the same checklist by reviewing exchange transparency reports quarterly. Alerts can be set for any change in multi-signature thresholds on those platforms. The edge comes from catching custody risk signals before they appear in price action. Quarterly reviews of transparency reports form the core of the updated checklist. Continuous checks replace one-time audits in the Hacken framework. Defense Metals is presenting its rare earth project at the July 22nd Precious Metals and Critical Minerals Virtual Investor Conference, giving retail investors direct access to management slides and Q&A without travel. Listeners can register at virtualinvestorconferences.com and compare project metrics against peers using the same-day presentation deck. This format reduces information asymmetry for small-cap resource names. The July 22nd session focuses on precious metals and critical minerals projects. Management slides become available to registered participants on the day of the event. Retail investors gain direct Q&A access through the virtual platform. South Korea's KOSPI drops 4.5% as AI stocks swoon. The KOSPI index in South Korea fell 4.5%. Asian AI-linked equities led the decline in the regional market. Oil prices continued climbing during the same session. Sector rotation punished high-valuation growth names in the sell-off. Broader indices recorded only modestly lower closes in comparison. Investors should trim any individual AI-themed ETF positions closing below their 20-day moving average. Proceeds from those trims can rotate into a broad energy sector ETF on the TSX. Statistics Canada set to report June inflation figures. Statistics Canada will release June inflation data this morning. The figures provide the freshest read on cost pressures in restaurants. Cost pressures in construction are also covered in the print. These pressures directly affect outlooks for consumer sector stocks. Industrial sector outlooks face similar influence from the data. Add the TSX Consumer Staples Sector ETF to your watch list ahead of the release. Review holdings after the 8:30 a.m. print for any rebalancing signal. Rising costs outpace sales growth, eroding restaurant profitability. Restaurants Canada's Q2 report shows operating costs continuing to exceed revenue growth. The gap increases closure risk for smaller operators. Margins face pressure across the consumer discretionary space. Avoid adding new positions in Canadian restaurant names. Hospitality names should also remain on hold. Wait until the next quarterly update shows cost growth decelerating. U.S. gas prices hit an average of $4 a gallon again. U.S. The move coincides with fresh U.S. Iran clashes. Transportation-heavy Canadian businesses face the possibility of sustained higher input costs. Hold existing energy holdings through the next two sessions. Set a price alert on the iShares S&P TSX Capped Energy Index ETF. The alert level sits at the ETF's 50-day moving average. Our running matched window alpha stands at plus 6.59% across 37 trades, while the buy and hold gap versus the Nasdaq year-to-date sits at minus 9.19%. The AI analysis is learning from volume confirmation patterns and adjusting entry gates accordingly. Open your brokerage platform, pull up the 20-day average volume for any energy ETF you own, and compare it to today's volume. If today's volume is at least 1.5 times the average, note the price level. That is your confirmation threshold for any future geopolitical-driven ad. Before we wrap, watch tomorrow for the first reaction to Statistics Canada's inflation print and how it reshapes sector rotation in registered accounts. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets. Each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. SpaceX Daily, the daily companion for following SpaceX as a public company. From Starship to the stock ticker. Find every show free at naranetwork.com. The age of AI puts real builders on the phone with an AI host. Apply at naranetwork.com/age-of-AI apply. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?